Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. As the usual caveat, anything said in this piece is only an opinions for media publication. It's not investment advice, not financial advice. Whatever you do with your money, your account, it's your responsibility. If you make money, great. If you lose money, hard luck. That's my caveat. Everyone goes on now that they know it by heart, but I've got to say it every day in order to prevent anyone who potentially wants to come on and say, oh, I listened to you and I heard this and I did this and I lost that, and as a result of that I'm going to get money and I'm going to sue you. So there'll be no lawsuit. It's just an opinion, media publication, and if you take it on board, great. Let's get moving. Okay, so some of the comments came back from some of the viewers yesterday was that, why don't I edit Driving Markets? Why don't I wrap it up? Why don't I do some tools and some sort of pictures and the video and music? Well, the whole idea of Driving Markets is simply I give a commentary in the car while driving on financial markets. It's raw footage, it's harsh opinions, it can be extreme, but the whole idea is just to give the public a little bit of flavor of financial markets. That's really it. I'm not out to become some sort of social media guru with a whole production studio and a team following me around with a camera and let's do reality TV. The idea is to sit in the car while I'm driving, talking about the markets, driving markets, and give you a quick synopsis, a quick summary of what's going on and an opinion of where the markets are going. So let's get going. So yesterday markets shot up in the US. The Dow was up over 420 points. Everything was blue. Everyone's happy. All the bulls are out. Everyone's buying the market. It's all great. Why? Because they came out, the brainard of the Fed came out and said, indicated that maybe they won't be so aggressive with interest rates, or maybe the cycle will come to an end. It's all a load of trash. The cycle's not coming to an end. Interest rates are going up and they're going much higher. How long will it take for the Fed and the other central banks to get it through their thick heads and realize that inflation is only going to go up? So oil's come down. Great. Oil's come down to around about $82 a barrel. As a result of that, that will have an impact on inflation numbers and push inflation numbers down. However, the trajectory of oil and the trend of oil and the commodities is only going to go higher. It's only going higher. And therefore, if it's going higher, eventually it's going to feed into inflation. But for some reason, the Fed or the members of the Fed are hoping, or investors or traders are hoping, that the end of the interest rate cycle has happened or is on the horizon. It's not on the horizon. Get this clear. Interest rates are going up, and they're going to go up to the end of 2022 and into 2023 and maybe into 2024. You're now in a new era of rising interest rates, and therefore you need to sell into the rally. Any rally on the Dow, the S&P, the Nasdaq, the DAX, the FTSE, sell into it. We're not going into a bull market. Why aren't we going to a bull market? Because liquidity is tight. The Fed and the central banks are pulling in their quantitative easing and pulling in their stimulus and stopped producing new stimulus package, which is going to take liquidity out of the market. With the rising interest rates and rising bond rates, that is reducing liquidity in financial markets. When you've got reduced liquidity, you've got a problem with supply and you've got a huge demand, you're going to have inflation, and that's quite simply it. Not on the liquidity side. Liquidity side is taking money out, so you won't have a bull market, but a tightening of supply chain and a high demand that will produce inflation. Pulling in liquidity will actually allow the market to reduce the level of stimulus package and therefore lower inflation. So just want to separate those two particular points. Regarding, look at the foreign exchange markets. Listen, I love the pound, but unfortunately the pound has been absolutely hammered against the dollar. It's at a 37-year low. Pound dollar cable, 37-year low. It's down at 114, 115. I mean, yesterday it touched 114.20 or 30, I believe, and it could go down to 110. However, I do believe the pound is up for a massive jump going forward. Now you got the new Prime Minister Liz Truss. Let's see how good she is. But I think the pound has been oversold and it's probably up for a good bounce, and it could go all the way back up to 125, 127 to the dollar from here. So the pound looks like a good investment. I'm obviously a big fan of the pound, get paid in pounds, and therefore I'm slightly bullish on it because I want the pound to be strong. But I do believe the end of the cycle of the pound being hammered is here. Look at the euro dollar. I don't think the end of the cycle of the euro dollar, or the euro being hammered against the dollar, is here. The euro has gone down to 90. Yes, it was 98.50. It's jumped up to 99.24 against the dollar. It's going to go all the way down to 94, 95, 96 against the dollar in the near term. And the next one is dollar yen, which I've been saying for weeks on this channel. Dollar yen is an absolute buy, and it hasn't stopped. Remember, I was calling it. So we've been saying on this channel for a while regarding dollar yen. In fact, we're recommending it at 131. Not recommending my opinion, sorry, at 131. Look at it now, it's 144, and it's only going to go higher because there's a divergence between the US dollar and the Japanese yen. The Japanese, or the Japanese central bank, they want to keep interest rates at a low level, where America is raising interest rates, and therefore you're going to have a divergence with the rising dollar against the yen. So that has got huge rises. It's the highest in over 24 years. So globally, you've got the dollar, which is strong. Looking at other aspects, Apple has brought out the new iPhone. As I said yesterday, one of my friends said it's just a change of the number, it's the same iPhone. But now this new iPhone can detect a crash and fertility. So what you can do now is you can actually put it on the stomach of your wife and see if she's pregnant. So you can do an Apple fertility check. Have you heard that one? That's amazing. Apple fertility test. Phenomenal. Why would you buy a phone to know about fertility? In other words, it's all a load of trash. Apple's not brought out anything innovative in the last 10 years. That's not going to sell Apple, where they can detect a car crash or you can detect a fertility. It's a complete waste of time. So Apple is a big sell. Get rid of Apple. As I said, also with Amazon's a big sell, Facebook's a big sell, and also Google is a big sell. The shares are going to go down. They're far too high. The Nasdaq's far too high. It's all going to go absolutely south. And if you say I haven't told you, take a note on this. This is the channel. Okay? Meir Walensky, Driving Markets. Have a good day. Speak to you soon.